Good morning, everybody. It's Thursday, May 2nd, 5:26 a.m. Central Time. Grain markets are higher across the board this morning. July corn futures up 5 at 455 and 3/4. July soybeans up 10 and a quarter at 1180 and a half. July Chicago wheat up 11 at 610 and a quarter. July Kansas City wheat up 10 at 635. July spring wheat up 4 and a quarter at 706 and a half. Let's start off with this rail business.
A Canadian rail strike could disrupt supply chains across North America. More than 9,000 employees at Canadian Pacific Kansas City and Canadian National Railway are demanding more rest time. Both rail companies have made offers to the union representing the employees, but those offers have been rejected. The demands of the union and the company's offers differ substantially, according to a person familiar with the situation. The two companies make up almost 90% of the railroad industry's profits. The companies also represent over 75% of the total railroad transport volume. If no deal is reached, the strike could begin as soon as May 22nd.
This is not just a Canadian issue. These railways go from Halifax to Vancouver through the Midwest to the Gulf of Mexico. According to this article, interruption of transport products, including cars, coal, consumer goods, fertilizer, grains, minerals, and petroleum, would be disrupted. The president of the Teamsters of Canada said this: the simultaneous work stoppage at both CN and CPKC would disrupt supply chains on a scale Canada has likely never experienced. We want to avoid this at all costs for a couple of reasons. When transport is affected and you have logistics issues, it's never good for the grain markets in this instance. Is it the biggest deal in the world? I don't know. The other one would be fertilizer. Nutrien had something out yesterday. Nutrien is a huge fertilizer manufacturer, of course, and they're a Canadian company, and they're already taking some proactive measures, is what they said, ahead of a potential strike. So we want to avoid this at all costs. Hopefully they reach a deal here in the next couple of weeks.
Rain returned to the central U.S. overnight and into this morning. The radar is active over Iowa, southern Minnesota, eastern Nebraska, and parts of North Dakota. A strong but separate system also sits over the Gulf Coast. An active weather pattern is expected to persist through the 10-day period and perhaps beyond. The Euro model indicates more rain for most areas of the Corn Belt next week.
I got a bunch of maps here. So, yeah, active radar this morning. This is the next 5 days for the entire country. So, Iowa, western areas of the Corn Belt, down through Missouri and Arkansas and Oklahoma and Texas, places like that. Here's some specifics about the Corn Belt in particular. Western areas, Iowa especially, will be wet. Missouri is going to be wet. And then eastern areas a little bit drier over the next 5 days. If you guys are in the eastern Corn Belt, if you're in parts of Illinois, Indiana, Ohio, let me know if you think you're going to make any progress this week or if you're still too wet. And when you go to the 10-day, it's wet just about everywhere. So these systems, this active weather pattern is slated to continue into next week. This is the 10-day map for the Corn Belt, same one I showed you, but extended out another 5 days. So you're going to see this rain deal continue. There are some better rain prospects for HRW wheat country in Kansas, better amounts projected further west than what had been projected before. So I don't know. Planting delays are something that people are going to talk about. Again, planting delays, it's a strong word. It's a strong phrase because it gets people all worked up. Is the market higher this morning because it's looking at a wet forecast? I'm not going to say it's not. I've told you guys about 2019 and the extreme stuff we saw that year and how the market didn't start to rally till the middle part of May. But it's a different year. Could somebody be buying grains because they're seeing a wet forecast this morning? I don't know. I'll be very curious to see what the crop progress numbers say on Monday.
So if you guys have not checked out our premium content, you need to do so. Joe, can you tell me about your video with Pete Meyer yesterday?
There was a lot of noise out there regarding the GREET stuff and 40B and all this SAF news that was out. And I'm a market person, and I'm not even that smart when it comes to markets. I don't know a damn thing about policy, but Pete Meyer does. So I told Pete to explain this to me as if I was a small child. And I think we did a really nice breakdown of the whole situation. What does this actually mean for farmers? If you're a farmer and you're sitting there wondering, like, what the hell does this mean for me? What is it? What are the actual implications? We answered those questions and a lot of additional questions. I thought this was a really, really great breakdown of the entire thing. It's like a 25-minute video. It's all content, no nonsense. If you guys want to see that video, go to standardgrain.com, sign up for the premium deal this morning. I will forward you a copy as soon as you sign up. This is a $50 per month subscription. You can cancel it anytime. There's new premium stuff from us every single business day. Morning email goes out at 5 a.m. Central. The midday video blast goes out at 10 a.m. Central. We've got all sorts of additional charts and graphics, weather stuff that you guys don't see here on YouTube or in the podcast. So give that deal a shot this morning, guys.
U.S. ethanol production increased last week. Weekly output of 1 million barrels was up 3.5% on the week and up 2.1% versus the same week last year. Ethanol stocks were pegged at 25.5 million barrels. The print was down 1% compared to the previous week, but up 4.9% compared to the same week last year. Implied gasoline demand was up 2.3% compared to the previous week, but down 9.4% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is down 5.4% versus the same period last year.
Ethanol production has bounced back. We had a couple of weeks of poorer production because of maintenance, because of slow farmer movement. In any case, I believe U.S. ethanol production or the corn number via ethanol is still on track to hit USDA's target. There are some concerns regarding that gasoline demand statistic. On average over the last 4 weeks, gasoline demand off, would you say 5.4%?
Yep.
That's concerning for a lot of reasons. Is the economy shaky because gas demand is down? I don't know. And seasonally, I think gasoline demand should be improving.
Oil prices tumbled more than 3% on Wednesday to a 7-week low. WTI crude declined 3.6% to settle at $79 per barrel, its lowest level since mid-March. The decline was attributed to a surprise increase in U.S. crude stocks and the potential for a possible Israel-Hamas ceasefire. Oil prices were also suppressed due to the Federal Reserve leaving rates unchanged yesterday. Also on Wednesday, diesel futures settled at their lowest level since July of last year, and gasoline futures settled at a 7-week low.
And this may go back to the previous story a little bit in that weaker gasoline demand numbers. One of the one of the possible catalysts for a broader grain market rally could be a broader commodity rally. And those hopes have kind of been dashed here the last 2 or 3 weeks. Crude oil's been softer. The chart still doesn't look terrible to me looking at this weekly deal. When you look at the Bloomberg Commodity Index, it's corrected lower this week in particular, and we're still kind of in this holding pattern. So if you see a breakout here to the upside, if you get crude to break out to the upside, maybe the grains follow along. We are not to that point, and in fact going in the opposite direction right now.
The Federal Reserve held interest rates steady yesterday, despite a lack of progress bringing inflation down. Fed Chair Jerome Powell stated that the Fed isn't likely to consider rate hikes. He added that rate cuts could begin if the job market were to weaken. Powell expects inflation will continue to trend downward this year, but it will likely take longer than anticipated to reach the Fed's goal of 2%. At its March meeting, the majority of Fed officials projected 2 or 3 rate cuts this year, but after a string of disappointing inflation data, many are now expecting only 1 cut by the end of the year.
Quite the shift in the narrative here. So now he's got to say that we're not considering hikes, where before it was like almost a damn near guarantee that they were going to cut in June or July. That's off the table. If the cuts happen at all this year, it's going to be very late in the year. So higher for longer is the trend. Absolutely. What did cattle do yesterday?
They took another step lower. Feeders were an average of $3.55 lower. Live cattle were an average of $1.64 lower. Box beef continues to slide lower also. Choice ended the day at $294.37. That was down $3.16. And select ended the day at $289.95. That was down 26 cents.
Outside markets, U.S. dollars up just a little bit. Stocks are higher. The S&P's up 32. The Dow's up 140. Bonds off just a little bit. Crude oil is up 55 cents in the June WTI at 79.55. Have a great day, guys. We'll talk to you Friday.